Welcome to TradeTheMBI.com. This is John. This report is for the 8th of August, and while coming off those stellar job numbers, once the market began to digest and realize that underneath it, most of the gain was people with a job taking on a second job, and really not much of a change in labor participation, meaning some kind of funny business with the numbers, because you can't have both. You can't have record job growth and no change in labor participation. Those didn't match, so that helps to maintain the narrative of the Fed having to ease into some type of slowing. Of course, you've got to make things look as good as you can because you've got just a couple of months to an election. So if you can just push it off a little bit longer, all is good. When we look at the readings, still plenty of money available. MBI still magenta 37, well into the positive territory. You'd have to dip below that 33 for anything to even go negative. We've got rising gold. Slight dip in the shakeout, but we're still well positive. So the first uptick on that is going to be the breakout phase that takes place, and slight DOC spread. So a lot of contravening reads within this, which is why we've been going kind of sideways, despite the relatively bullish configuration within these readings. So from a bull standpoint, not great unless you can get a blowout day that will really help drive things, because you're starting to get short activation right at the same resistance level. At the same time, you've got some of the other areas that are declining. But with the rising gold, we look like people are still going to be wanting to buy those dips. And that's what we kind of just keep our eye out for. A little stronger again on the NASDAQ. You can see it's just a slight differential between the shorts on the DOC right here, because cyan is just barely above the green, not in the same spike ratio that you would look for where you get that dramatic move. Not to mention you have steel coming from way down below. Usually your best DOC spreads are like back over here where you start to get a spike of the cyan, and then you have the breakdown of the green, crossing below with red already below zero. In this case, red is 3.58, so well above zero. So it may look similar, but when you break down the key components of it, not even remotely close to the same look. From a euro standpoint, again, the problems for the EU zone continue to persist. I mean, obviously, take into account the devaluation here down to 101, so it's 27% deduction in the value against the dollar. Combine that with the fact you need to buy more dollar-based oil, and then you combine that with the Fed, who has restricted dollars to a larger degree to try and rein in inflation, and well, there you have it. It's a triple hit for the EU in particular, since the majority of their funds are being spent on trying to buy US dollar-based oil. Before sanctions, they were buying oil in euros, so there was a greater demand for euros. That shift in demand, you can see exactly what happened. So bear this in mind. At some point when you see dollar demand decline, you get the exact same effect. So it's something to pay attention to right now, as long as that commodity is traded in dollars. Not so much, but as we see more and more, some of these other countries starting to make bilateral trade agreements outside of dollar-based configuration, that does spell a longer-term prospect for the dollar, but not right now. From a gold standpoint, a little bit of a pause in the uptake. This is some weakness, a little bit built into there. We're still in the rise and shakeout. If they start to fade, we may not see a breakout move above, but it should continue higher. Because again, when you're looking at that kind of devaluation in other currencies, the strong dollar obviously is holding gold back a little bit, but at the end of the day, if you count inflation the way they used to, we can see that we're running, strong into double digits, whether it's 15 to 20% range, and that's going to continue. There's no incentive for the Fed to alter it, because it really reduces the impact of deficits. So when you see the new spending packages and stuff like that, well, those dollars are going to buy both fewer goods, but they're also going to be worth less and less every year going forward. So kind of pays for itself in a perverse sort of way. And of course, this easing of oil, I mean, it's still up there, but it's a dramatic reduction overall. Just some of this is a reflection of potentially the problems that are growing in China with their economy and the disruptions that they're starting to see with their mortgage crisis, and just likewise to the West, over debt laden and a lot of inefficiencies, particularly with the COVID situation. So that's kind of unusual, and that could compound things going forward. So we'll keep an eye on it, but that would be easing of the pressure of oil, and it's not necessarily a bad thing for people's pocketbooks, though it could create a whole new wave of purchasing power increase, which definitely staves off the idea of a deepening recession. So that idea of a soft landing definitely possible if you can continue to ease oil prices. And of course, the demand on treasuries just has to go lower, which makes the yield rise, and there's just no way around it because the Fed is not going to stop anytime soon. Strong reaction out of Bitcoin here at the early morning. Buy signal came in relatively right under the 50% with the crossover of the blue, the magenta, all starting to rise in there, and that really giving it a nice run. Turning to Ethereum. Nice move as well. So mimicking what we're seeing on Bitcoin. Interesting that the market isn't sharing that same kind of jump, but we'll see. It's early. There's potential for it to break out. Of course, 50K had already bought the longer run on it. From an intraday standpoint, you can see the pre-market all positive after initial post-market close dip, and everything was buying. In intraday, though, again, this is what I've been talking about. While it looks like doldrums and sideways, we've seen some fantastic moves intraday. Very clean and exciting from a day trading standpoint. So really things have moved towards the broader back and forth, and I think that presents a lot more opportunities, at least from a trade standpoint, to take advantage of some of these dramatic swings that we're seeing intraday. As much as 40 points down, back up, another 20 plus going back down as we move through the day, and then just kept going. So, I mean, it's just a paradise of day trade capability going on within there. It's just a matter of following what those readings are. As always, though, I'll continue to update you on Skype chat. Trade well. We'll talk to you later.